The data center buildout trade has been thriving in 2025, and analysts project it will continue through 2030 to be a $1 trillion market. Unfortunately, many of the pick and shovel plays are way overvalued and priced in this growth, with PEs ranging from 32 to 72. That's why I am excited to be covering Power Solutions International, a small cap stock that has seen this 70+% growth due to the growth in data center buildouts, but is still trading at a reasonable 18 PE ratio today. Now, what Power Solutions originally did is they supplied engines for trucks and construction equipments. That's not a business I am interested in. The big tailwind in the market that I am interested in is now these data centers are scooping up these same engines to provide continuous and backup powers for their sites to ensure zero downtime allowed. This is too major of an economic impact for a data center to have an outage. For data centers aiming to be run with renewables, generators are also needed, not just for backup, but rather to provide a bridge for when the sun does not shine. Now, the giants in this space are Caterpillar, Cummins, and Generic, which have all benefited from the same tailwind, and it shows with their elevated PEs, or they are also trading at an all-time high. Power Solutions is able to compete with these giants by allowing their engines to be run on alternate fuel sources other than diesel engines. Currently, majority of their engines are run on the abundant and cheap natural gas. Having this flexible fuel agnostic source is a key differentiator, as besides just cheaper fuel sources and fuel costs, some regions require emission certifications which a diesel engine will not meet. I do want to emphasize, though, that these giant competitors also do sell non-diesel engines, but the difference is it is a small part of their overall diesel engine-driven business. Power Solutions will work with customers to customize a solution with agnostic fuel sources. Ultimately, Power Solutions is winning data center business, and it's shown up in their financials. The data center business sits here in the power systems segment, which in the first half of 2025 made up 80% of all their revenue and nearly doubled year over year for revenue. Very good growth, and I do want to emphasize how large this power backup solutions market is at $50 billion by 2030. Plenty for Power Solutions, which is less than 2% today, to be able to grow into, despite the competition from Caterpillar, Cummins, and Generic. So that is a bullish perspective. The bear perspective highlights two key watchouts. Watchout number one is that Power Solutions is majority controlled by Chinese conglomerate Weichai. Power Solutions addresses this in their investor presentation head-on and highlights the benefits they receive by being able to leverage the R&D and innovations of their bigger Chinese partner. That is true, however. The bigger risk is that there may eventually be a policy prohibiting any Chinese-controlled businesses from being able to sell any hardware within a data center due to information security concerns. Trade terms are good now between the United States and China, but a single tweet impacting the existence of Power Solutions' data center business is a bit risky and anti-fragile. Second watchout is long-term. I do not believe commercial generators will be needed anymore. The industry is shifting to lithium-ion-based energy storage products for backup that are way cheaper and better for the environment. Or, in Brookfield's case, they are shifting into hydrogen fuel cells that is provided by Bloom Energy. In the next 5 years, gas-driven generators will still be needed and growing due to the supply availability and ease of implementation. But long-term, I would rather be focused on investing in other energy backup solutions. Now, before we run Power Solutions through our framework, please read the disclaimer in the notes below. We are not financial advisors, and anything we say should not be taken as financial advice. Also, if you like content like this, please help us out and click a like and subscribe as we aim to analyze the most innovative companies twice per week. Now let's run Power Solutions through mine and John's frameworks. From a leadership perspective, I give this company a very weak. I do like that their CEO has a background in engineering, but that is the only positive. While he wasn't directly involved like their former CEO and sales team, I do have a bad taste in my mouth that he was in a leadership position with Power Solutions as their VP of Engineering back in 2014 when they committed financial fraud. I would have preferred a completely fresh slate of leaders, especially for their CEO, for a company with this history of financial fraud. Also, I am not a fan of Chinese conglomerate Weichai being a control and owner of Power Solutions, as this introduces geopolitical risks. From a valuation perspective, I give this a strong. A 18 PE for a company able to grow revenue by 70+% is very favorable. It isn't very strong, as they really just sell a single product, field agnostic power solutions. For revenue and profit growth, I give this a strong, since as mentioned before, 70% revenue growth is very strong, especially with gross margins near 30%. For total addressable market, I give this a strong, as the market for power backup solutions for the data center buildout is expected to grow from $20 billion today to $50 billion by 2030. Power Solutions captures just 2% of the market share today, so they have plenty of room to really accelerate their growth these next 5 years by capturing growing market share in this growing market. For long-term tailwinds, I give this a very weak. I believe beyond the next decade, generators will all be replaced by lithium ion based energy storage solutions, as it's just much cheaper and more environmentally friendly to go with lithium ion based energy storage. Overall, it should come as no surprise that I am in no to add Power Solutions to our portfolio. The valuation is nice, but leadership that I do not trust, and this technology not really being permanent, but just being a placeholder bridge until the real innovation comes in. What do you think, Dad, as you look through Power Solutions?
Thank you, Scott, for that excellent presentation and graphics. Yes, I like to do my evaluation of Power Solutions International, symbol PSIX. Okay, for the company fundamentals, it has no dividend. The beta is 1.59, which means it's 59% more volatile than the S&P 500. Market cap is around 2 billion, and earnings comes out November 6th. So that one, I gotta say, with the earnings coming out November 6th and being a small cap, I don't know if it's a good idea to make a decision on whether to buy or not. So anyway, I'll talk about that at the end, but I'm a neutral on that. Okay, for the earnings history, it beat the last four quarters, which is a positive, very positive, a positives rather. For the financials, the net profit margin is 19%. The debt to equity is about 200%, and the PEG ratio, it has no PEG ratio because it has no long-term earnings growth. So for that, I'm a neutral. And then for the stock technicals, the 200-day moving average has a positive slope. The 50 is above the 200-day, and the price is below the 50, but above the 200. And for the Bollinger Bands, it's between the middle and lower band. And the volume is down now because the bands are tight. So I'm sure once earnings comes out, the bands will expand. So we don't know which way it's going to go, up a lot or down a lot. So that's the Bollinger Bands. The slow stochastic oscillator is 53, which is neutral. The MACD and the unbalanced volume are neutral. So for that, I'm a neutral to positive because of the moving average. And for the analyst coverage, there's one hold, one buy, and one strong buy. And the strong buy thinks it's going to go to 127, which who knows? You know, they know they know a little more than us, but that's just their best estimate. So and then also institutions only hold 16%, which means 84% is retail. So that makes it more volatile because retail could get into the market, in and out of the market very quick, whereas institutions, it takes a while to dump a lot of shares. So buy or sell a lot of shares. So anyway, for that, I'm a neutral. So overall, Scott, I'm not a yes or a no. On the no side, it's too niche of an operation, and the competition with Cummins and Caterpillar is tough. Uh, I'm hoping that maybe someone will buy the company. That's what I'm hoping. Um, on the yes side, it's in a good market right now because of the generation needed for data centers. It has to be on 24/7. So in case something comes up and you need a generator, you need Power Solutions International or Caterpillar or Cummins. And Power Solutions International is good because, as Scott was saying, it could run on non-diesel fuel. Um, but I'm a no because of fraud that was happening in 2014. So overall, I would say that I think we need to revisit this after the earnings comes out and see what happens because it could go up or down a lot because it's a small cap and the way the market's going at this time, um, small caps are getting hit pretty hard because they usually sell first during a market downturn. So anyway, okay, Scott, back to you.
Thanks, Dad. Overall, we are both a no right now. Love the segment that they are in and that they can benefit from data center buildouts, but cannot overlook their poor leadership and corporate governance. What do you think? Please let us know in the comments below and click like and subscribe to follow us as we aim to cover the most innovative companies twice per week. Until next time, happy investing.